Over the past few months, I've managed one trade that's on track to book over $7,200 of income using less than $23,000 of capital. That's about a 32% return on my capital, and it takes about 5 minutes a week to manage this trade. Hey everyone, I'm Doc with Ready Set Crypto. In this video, I want to show you step by step how I set up these trades to create this income. I'll show you the actual fills for my brokerage statement with the dates and times that the trades were made. I want you to go through these steps and reverse engineer my trade so that you can really understand how you can create income from the crypto market. All right, let's get started. This example is going to be how I earn income, actual income from trading Bitcoin derivatives. I'm going to first explain the rationale behind the trading vehicle that I used and then get into the actual trades. If you don't need the background, go ahead and skip to the actual trade sequence on the timeline below. Now, we're going to use BITO as the actual ticker symbol. Until November 2024, the only way that you could create income through options was to trade a futures-based ETF, a Bitcoin futures contract, or spot options on an exchange like Deribit. BITO is one of these futures-based ETFs offered via any broker that offers access to products listed on the NYSE. Trying to trade the options on the CME Bitcoin futures contract or /BTC required too much capital since they were set for 5 BTC notional value. Those are huge. The micro Bitcoin futures contract or the /MBT was delisted at my broker due to poor liquidity. Great idea, bad execution. 6 years ago, I could trade on Deribit as a U.S. customer. The U.S. SEC changed all of that recently and prosecuted any exchange that allowed U.S. customers access. In May 2024, when I initiated this position, the futures-based ProShares ETF BITO was one of the few available alternatives, so that's what I used. I think you'll see the pros and cons of using BITO in this sequence. Today, I would recommend using one of the spot-based alternatives like BlackRock's IBIT, ARKB, or Grayscale's GBTC. Now, if you don't have experience with options, first off, please don't set up live trades until you understand how they work. Most platforms have a paper trade function that allows you to figure out the mechanics of options without the possibility of loss. And when you do start, trade small. Please don't be in a rush. You have your whole lifetime to master this. Once you learn the technique, you'll be able to use this on any asset for the rest of your life. Learn it right the first time. I will be trading puts and calls in this trading example. Those that do have a little experience with options will normally associate puts with a bearish trade and calls being bullish. Since I'm selling to open these put and call options, it's quite the opposite. I will sell to open a put option when I want to own the shares of that ETF at a price below where it's currently trading. I'll show you this in a minute. When I sell to open that put option, the cash goes immediately into my account. This is called selling a cash secured put. It's called a cash secured put because I need to have enough cash in my account to secure the purchase of those ETF shares at the strike price that I sold at. Again, you'll see this in an example in a minute. I will typically start this option sequence by selling put options until I'm assigned the shares, and then turn around and sell call options against those shares as well. This process is called the wheel strategy, where you just go through a continuous wheel of selling puts, get assigned the stock, sell covered calls until you get called out, and then go back to selling put options again. When I'm assigned the ETF shares that I agreed to buy, I can rent out those shares by selling call options above the current price. It's almost like being a landlord owning an apartment building and renting out the units. When I sell to open that call option, the cash goes immediately into my account as income. I can do whatever I want to with it. I will continue to sell calls against my shares until the price eventually rises above my strike price and I am called out of my ETF shares. I now have no ETF shares anymore, so I can restart the wheel strategy by selling put options again below the current price. If you're new to options, I have lots of resources available to learn how to make income with options, specifically crypto options, at readysetcrypto.one. Let's get to the examples. Here's where it all begins. Step one, here's our initial trade, which is a short put option. So here it is down here, May 29th, and we're going to sell a put on BITO. And so what we did was we sold 5 of the July 19, 2024, $25 puts at $226, which means per contract, that's $226 or $1,130. So what does that all mean? Here is the chart of BITO at that particular time. So again, this is May 29th, and the price was up here at 27 and change. And I said, if the price comes down here to 25, then I want to own BITO. And to do that, I'm going to obligate myself by selling 5 of these $25 puts, and each of them brings in $226. So basically, I'm being paid to buy this at a pullback. So again, if you're new to options, this trade means that I'm obligated to buy BITO shares, 100 shares per contract. And remember, I sold 5 of these. So that's 500 shares at any time the price drops to 25 or below by the 19th of July. Now, as we will see in a minute here, the price actually did drop below 25, and I got assigned before the 19th of July, but we'll get to that in a minute. Price of BITO at the time was $27.50 a share, sold 5 contracts, received $226 per contract, or $1,130. That goes straight into my account. That's cash. You don't have to do anything with it. You can do whatever you want. It's your money at this time now. Now, I needed to have at least 25 times 500 or $12,500 of cash available to accept possible assignment. This is why we call these cash secured puts. So let's tally up our income. 1,130 credit received so far for these 19 July puts. Let's talk about our second trade now. This was an additional short put sale that I made. And this is about a month later. So this is July 1st instead of the end of May. So about a month later, I sold a different series now, the August 16th options, which were about 6 weeks distant from there. And this time I'm selling the $20 puts, and I received for 5 contracts $485. So let's see what this looks like. The price was just about $22 per share at this point. Remember, I still owned that short 25 puts. So at this point, it looks like I'm probably going to get assigned on those. And as you'll see, I did. But I wanted more because I was still overall bullish on Bitcoin. So it's like, let's continue to buy as the price drops, and let's see if we can lower our cost basis. So I sold down here at the $20 level on BITO. So here was a trade. I sold 5 contracts. The series was 16 August of 2024, $20 put options, and I received per contract $97 for those. Again, the price of BITO at the time was about $22.10 per share. Sold 5 contracts, received $97 per contract, or $485 of cash straight into my account. I own that cash now. It came straight into my account. There was no other obligation for that. So I needed to have $20 times 500 or an additional $10,000 of cash. Now this was in addition to the $12,500 that I needed for the previous, or trade number 1. So for this short window of time, my margin requirements for $12,500 plus $10,000 or $22,500. So that's the most that I ever got up to on this particular trade series, was needing $22,000 for this. Again, you don't have to trade 5 contracts. You can trade 1 contract and divide by 5 all these results. So let's tally up our income at this point. We still are keeping that $1,130 credit received, and we got another $485 credit received for the 16 August puts. Here is our third trade. Now, remember me telling you that when the price was up here, I sold a put option down here and I said, okay, go ahead and pay me to obligate myself to buy the stock down here. This is what a short put does. And so guess what? The price did come down below that $25 level and we did get assigned. Now this happens automatically. It's beyond my control, but I've obligated myself to take advantage of this. And so I was perfectly fine with it. So step 3 is I got assigned. You can see here that buy to open 500 because we sold 5 contracts, BITO at $25 per share. And so we remove that option due to the assignment. And so here it is. Now you might look at this and say, oh my gosh, the price is down here at $20 and you are forced to pay $25. Well, that's okay, because when I sold this trade up here, it was $27. And I said, pay me over $1,000, $1,100 or so to obligate me to buy that. So remember, that cash went straight into my account. I still keep it. So I got my wish. I got assigned shares of BITO. I paid a little bit more than I want to for it, but that's okay, because overall, I know that Bitcoin is more than likely about to break to the upside. And you're never going to know what the future is. And so you just have to play what's in front of you. So I was assigned 500 shares of BITO from the 5 contracts of $25, 19 July puts that I had sold. Now they assigned me on the 10th of July, so that was a little bit early. Didn't have to wait until expiration. That's fine. And this will happen from time to time with anything that uses these American style settlement. So when you sell put options, you're obligating yourself to buying the stock at the agreed upon strike price. In this case was $25 per share. So I was paid $1,130 for this trade, and I kept that cash. So now I own 500 shares of BITO at a cost basis of $12,500 minus $1,130 or $22.74 a share. So all is not lost. So this definitely did drop my cost basis. So I still have 5 contracts of short puts at the $20 strike price. Remember the ones that we did for August. So if the price continues lower, I might be assigned another 500 shares at the $20 price point. So let's do our income tally here. It's still the same as it was before with the $11.30 credit received. I'm keeping that. And then the $4.85 credit received for the 16 August put, which I still hold. Now here is step 4 of our trade. And now that I own the stock, I can do what's called selling covered calls. Now the analogy that I always use with this is if you're a property owner, if you own an apartment building, certainly you'd want to consider renting out your building to tenants. And that's exactly what we're going to do with this stock. So here is the trade here. Now that we own 500 shares, what I'm going to do is I'm going to sell 5 contracts of short calls. Now this obligates me to sell if the price gets back up to 25 again, although there's things that we can do to affect that. So here we go, July 16th. I waited for a little bit of a bounce from here. So this is very useful to make sure that I was able to sell up here at my original cost assignment, which was $25. So I sold the $25 for the 20 September cycle. And so when I sold those, I received income from there. So 5 contracts at 80. So that's $400 that I received. And my obligation now is, since the price is down here, if the price gets up to 25 or higher, I may have to sell those shares back to the broker at $25 per share, even if the price is higher than that. So when we look at this, I've now collected over $2,000 in cash into my account in less than 2 months. I own 500 shares of BITO, so I've got Bitcoin exposure, and I still have 5 outstanding short put contracts. I may own 1,000 shares shortly if the price keeps going lower, and that would happen if the price undercuts the $20 level by 16th of August. So here's my income tally: $11.30, $4.85, and $400. All of this went into my account. That is income. Okay, step 5. Now, as a stock owner, not only am I allowed to rent out my shares through covered calls, but also I'm open to collecting dividends since I'm the owner of those shares. So that's what happened next. Since we were on the record as owning stock as of the 1st of August, on the 8th of August, I received my dividend payment for those 500 shares, which was almost $724. So the ex-dividend day is on the 1st of August, so you have to be the shareholder of record on that specific day. And if you are, then you are open to receiving shares. Even if you sell it the day after that, you're still going to get that dividend. So on August 8th, they pay me, and here comes the money. Since I received this dividend payment of $1.44 per share, or $723.53. So look at all this cash that I've now collected, $2,700 in cash in my account in about 2 months. I own 500 shares. I still have the 5 outstanding short put contracts to buy more BITO if the price undercuts the $20 level by 16th of August, which is still 8 days away. So here's our tally: 1130, 485, 400, 724. We just got this cash coming into our account. This is what income is all about, guys. It's all about setting up trades to create income and cash flow into your account. I love it. Okay, here is step 6. What we're going to do is a slightly advanced concept. It's called rolling. We're going to actually close out those short puts and we're going to move them down. Now, why would I do something like that? Well, if I think that the price might be heading lower, I might not necessarily want to be assigned at $20 per share. Instead, I'm more comfortable with being assigned at $18 per share. So that's what I did in the middle of August before these options expired and I was assigned. I said, let me see if I can get a lower price. So what I did was I closed out the 16 August $20 puts. Remember, the price is down here in the 19s. It's almost up to 20. I might be able to get away with this and I might not be assigned, but I'm not sure. So what I wanted to do was just to kind of force the issue in my behalf. So what I did was I closed the existing puts and then reopened them further out in time and lower. I said, okay, instead of 20, I'd rather buy them at 18. Who wouldn't, right? So I'm just kind of pushing that decision out and I'm making a profitable trade with this. So I was okay with being put BITO stock on my remaining short 16 August 20 put options. Price was in a pretty healthy downtrend. Again, let's go back here. This is a pretty healthy downtrend, right? So this is a more of a defensive conservative play to roll things down, give myself a little bit more time for the price to bounce back up. Since we originally sold the 16 August puts for $97 per contract, and then we closed them out for $48, we ended up making a profit of $245 on the 16 August puts, which is great. We also took in an additional $405 in credit into my account. So let's do the tally. So there was a closing cost for the 16 August, but when we put this together, we originally received $485 of credit, and then we closed them down for $240. So we did make an overall profit on that trade. And then we opened up some new puts down here. This is the roll for the 20 September puts, which we moved down to $18 strike price. So that's our income tally. Again, we just keep getting money coming into our account. And this is what income is all about. And now this is getting embarrassing because they just keep paying me for owning the stock. And so the next month I receive another dividend. So I was the shareholder of record on the 1st of September. So on September 10th, they give me another check and it goes straight into my account, another $604. So on September 10th, I was the shareholder of record as of the 1st. So another dividend payment coming in. So since I have 500 shares of BITO on or before ex-dividend date of 1st of September, I now received the dividend payment of $604.42. Now I still carry those 20 September $18 short puts that's still in the background here. I don't give a dividend from those additional 5 contracts because they haven't been converted to stock yet. So here's my income tally. Now we're adding another $604. So you can see all this cash that's coming in. This is the income that comes into our account that we get to keep. Here's our next trade, trade number 8. I'm rolling the short puts again. Now, why would I do something like that? We did this on the 17th of September. And what we did was we bought back just before expiration, these puts that I was about to get assigned on, bought them back, and then we didn't move them any further down, but we moved them another couple of months out in time. We gave ourselves a lot more time for the price, which was in a pretty healthy downtrend, to finally bounce. And as you'll see, that's exactly what happened. So again, healthy downtrend. What we did was we said, man, I could be assigned here, which is not the end of the world. If I was assigned at 18, that's great. And it actually probably would have worked out better for me had I been assigned. But we don't know what the future holds. We don't know that the downtrend is going to go away on this. So what we did was we just moved these $18 puts further out. So I bought them back for 23 cents or $23 per contract, and then sold an additional 5 for $1.97, or almost $200 per contract. So let's tally this up now. We had, for the 20 September puts, we sold these originally for $405, and then the cost to close them down was about $115. Still made a profit on the entire trade. And then here's our brand new one, and these are short puts for the 1st of November, and bringing in almost another $1,000 of income. Again, just income constantly coming in one form or another. This is the way that we work these things against an asset. So think of this as kind of like a business where you've got different product lines that just keep finding ways to make you money. And that's what we're doing. In this case, it's just shares of stock. Our next trade, step 9 here, is our covered calls that we sold at the $25 level. Well, they expire. So what they did was they removed these call options because they expired on the 20th of September. So we don't get paid anything else for this one. So these $25 short calls, which we sold on the 16th of July, now are expired, worthless. So the money that we got from putting those trades on 16th of July, we don't get any more from that. It just expires. So my obligation expires for that. So my obligation is released. So I'm going to sell calls again at the next opportunity. The income tally is exactly the same as it was before because we really haven't added anything new. And here's step 10. Guess what? We get our dividend again. These are coming in every month. In this case, I was the shareholder of record as of the 1st of October. And on October 8th, I'm paid another dividend payment. Since I own 500 shares of BITO on or before the ex-dividend date of 1st of October, I now receive the dividend payment of $1.09 per share, or $546. I still carry those 1st of November $18 short puts. So here's our next payment coming in, the $546 dividend payment received in October. Now we go to step 11. I'm selling covered calls again, and those short puts expire. So first of all, the short puts that we sold way back here, which were sold on the September 17th for the 1st of November, these expire. And so we're no longer going to be looking to buy down there at the $18. Now, also what we did was during the same time here on the 1st of November, we sold covered calls at $24 per share. So the price is down here, and we said, hey, let's see if we can sell up here. Now, my original cost basis for these was 25. I usually don't like to sell below there, which, as you'll see in a minute, actually hurt me just a little bit. But again, we're in this pretty nasty downtrend, and there was no, we hadn't gotten the election results yet. So there was no reason to think that this was going to go blasting higher anytime soon. So that's what we did that. So we sold 5 contracts of $24 calls, and those pulled in $34 a piece, or $170. The 1st of November, $18 short put options expired worthless for full profit. So here's the next paycheck that I got here, $170 credit received for the 31 December calls, those $24 short calls. Now we're going to go step 12, receive dividend again. It's embarrassing. They just keep coming in every month. So I was the shareholder of record as of the 1st of November. And then on the 8th, I get paid my dividend payment, in this case, $497. So since I own 500 shares of BITO on or before the ex-dividend date of 1st of November, I now receive the dividend payment of almost $1 per share, or $497. I still carry those 31 December short calls. So here is our dividend coming in for $497. So this column, and we'll continue on the second column over here, but I've already earned $55.91. This is all income. All of that is income just coming into my account, and I can spend that, do whatever I want to with it. Now we're going to be doing a little bit of a roll because the chart's doing something a little bit different, as you probably would expect at this point. So I'm going to be rolling the calls. Now, before we rolled the puts, but this time I'm going to be rolling the calls. I bought back the 31 December calls, and I rolled them further out to the $27 strike for January. Okay, so let's take a look at that. So here's our after election bounce that finally came. So big bounce up here, getting up to that $24 strike. I don't want to be selling those 500 shares at 24 when I had to pay 25 for them. So I'm going to move them up to 27 so I can at least make some capital gains on them if that does occur, if the price gets up and beyond 27. So the rally that seemed to take forever finally happened. I did not want to be forced to sell my BITO shares at $24 per share, so I closed out those 31 December $24 calls, had to spend some money on that, and open up new ones into the 17 January cycle at the $27 strike price. So I bought these back for $1.85 or $185 per contract, so a little bit expensive, and then sold the new ones to help pay for that. So that was a loss of $755 to move those calls, and then I brought in $570 in new credit to help compensate for that. So this is the first loss that we've shown on all of this. So we actually had to take money out of our account to handle that roll for the calls, which is fine. This is very normal. And then there's 570 credit received for the new calls. So here is our subtotal to this point as of today when I'm recording this. $52.36 of cash received since the very end of May, beginning of June, for basically an occasional trade, right? We're doing maybe a trade a month or so. It's taking me about 5 minutes a week, if that, to manage this trade. So let's summarize everything to do with this trade right now. The total money so far, total income, current cash position that is in my control, in my account, is plus $52.36. If I allow the shares to be called out, so if the price keeps on going, so let's say maybe Bitcoin continues to rally into the 17th of January and goes above the $27 level on BITO, then I will be called out. So if I allow the shares to be called out at $27 per share on the 17th of January, I will have received profits of $52.36 plus the capital gains of $2, because remember, I bought those shares at $25 per. So I get capital gains of $2 per share, or $1,000. And don't forget, we're going to get dividend payments for 1st of December and the 1st of January, because I will be the shareholder of record as of those dates. So I'm estimating roughly, I don't know what the dividend payments are going to be, but roughly another $1,000 for 2 dividend payments for 500 shares. So that's a total potential profit of $72.36, trading against a peak capital expenditure of $22,500. So this is the very most at any given time on this trade, when I had not only owning shares or the 2 different times that I had short puts against the trade. So that's a 32% return on capital, right? So try to find something like that. You know, certainly if you buy an altcoin and it moons, you're going to get 100x, but how often can you do that consistently? And there's no income from that trade. You have to be able to be lucky enough to get in at a low point and be able to sell it. This is talking about income, where you're basically acting as an insurance company. You're generating cash from this business. How much time did I spend on this? How often did I have to be right? Hardly ever. 5 minutes a week time to manage this trade, if that. Now, I did this whole example on the BITO, which has got its own little issues with liquidity and the way that they take the dividend out of the price chart. And I've been trading the IBIT, which is BlackRock's version of the Bitcoin ETF, for a few days now since they released the options. And it is much, much easier, much simpler experience to trade the IBIT versus the BITO. So you might be asking yourself, how do I get started with this? I hope you took the time to kind of like walk through here. And if you really watch this a couple of times, you'll start to understand the process of trading the wheel and learning to earn income off of a fixed asset like stock shares, which represent, in this case, crypto Bitcoin. So how do you get started with this? Some ways to get started is that, remember, earning income is a completely different venture than looking to trade spot coins that might moon at some point in the future, which you really can't depend on, and your timing is 100% going to be responsible for success there. I can trade this strategy whether the price is going up, down, or sideways on Bitcoin. The new ETFs are so much more efficient than trying to trade this on illiquid Bitcoin brokerages with wide bid-ask spreads. LedgerX comes to mind with that. Everyone should have a goal of income with part of your portfolio. If you ever want to trade for a living, your only goal will be to create income. Don't ask me how I know. I have lots of options resources at readysetcrypto.one for you to dive in, and I'm creating resources now specific to these new crypto ETFs that have options. Options can be tricky if you don't know what you're doing. Don't let the market charge you for tuition. Don't learn on your own. It's the most expensive kind. I've been trading options for 20 years, and trading options was 100% my key to quitting my day job way back then. So I've been waiting 6 years for these ETFs to be printed and for options to be available. So please join me and let's go. Thanks for watching.